Hello traders and welcome to another video review. Today is Friday, November 7, 2025. Let's take a look at the Forex economic calendar for today. Household spending data in Japan down from 2.3% to 1.8%. Imports from China down from 7.4% to 1%. And trade balance shrinks from $90.45 billion to $90.07 billion. Exports are below the level of 1.1%, down from 8.3%. But bunch of data from China. Halifax house price index in the UK 1.9%, up from 1.3. German trade balance down from 16.9 billion euro to 15.3 billion euro. We are waiting for the data released during the London session. Consumer climate in Switzerland is scheduled for release at 9 o'clock. FOMC member Williams' speech is scheduled for release at 9 o'clock. And mortgage rate in the UK is scheduled for release at 11 o'clock. During the US session, obviously the major event here is the average hourly earnings and non-farm payrolls data release. We will see if they will be released because of the US government shutdown. This is of course the standard situation when the government is shut. This data might be not released at all, but let's wait for the half past 2. Employment change and unemployment rate data from Canada are scheduled for release at 2:30 as well, and the Elderson will give us speech at 2:30 as well. Unemployment rate together with the non-farm payrolls will be scheduled for release 2:30. Then we have Michigan 1-year and 5-year inflation expectations, consumer expectations, consumer sentiment data. All of them are scheduled for release at 4 o'clock. Then we have the Bank of England member Peel to give a speech at 4:15, and at 7 o'clock we got US Barker Hughes oil recount and total recount data for all of you crude oil traders. So that's the situation for the Friday, non-farm payrolls Friday. Usually it should be non-farm payrolls Friday. Let's wait and see what they got for us later on. But now let's switch to the technical part of this review, and we are going to start with euro dollar. Ahead of the NFP payrolls data, the euro dollar bounced towards the technical resistance located at 1.1537, local high 1.1553, so a little bit overshoot. Nevertheless, we are going back now below the technical resistance. Let me just place a line for the swing low. The swing low is located at 1.1470, and this will act as the technical support. Momentum is barely above the level of 52 points only, so again it looks like we got the series of the lower lows and the lower highs as the downtrend continues. So the market participants are selling euro and buying US dollar. Cable dipped even more than we expected because it broke below the technical support at 1.1396. Then this market is back towards this little consolidation zone here around 1.31. So local high was made at 1.3141. And as you can see, it bounced quite strongly from the extremely oversold market conditions on the 4-hour time frame chart as well. So very nice movement to the upside. Right now 54 points on the momentum, so it is positive, but it's not strong. The same situation here is being spotted. So the market participants are selling British pound and buying the dollar. Local low is 1.30.10, so round number 1.30. Well, let's see what will happen later on after the non-farm payrolls data are published, if they are published. We don't know it yet, and it's really clear to see that this market is below the 100 piece moving average. Is keeps trading lower, so the outlook remains bearish as well. Is the US dollar versus the Japanese yen moving higher? As you can see, this market made a new high. Nevertheless, it's not moving up as strongly as expected. 154.49 is the level. So this is the technical resistance, obviously, right? Yes. And now what we are going to do is we are going to, of course, place our indicator for the gap, because gap is still not filled, and this will be the support. So let's just place the rectangle again to remind you guys that there is still a gap. Let me just remove the magnet. There is still a gap that has not been filled yet, and it remains quite attractive for the bears. Nevertheless, so far the market keeps moving higher. As you can see, it bounced from the 100 periods moving average on a 4-hour time frame chart, keeps moving higher. Recently, local low was made at 152.86, and if the euro dollar keeps moving down, if cable will be moving down as well, there are chances that the euro dollar versus the Japanese yen will move higher again in this situation. All right, let's take a look what is gold doing. Obviously, so gold doing nothing, not much at all. It's still hovering around the level of $4,000 per ounce of gold. Keeps moving inside of this narrow range located between local high and the technical resistance level at 4,042 and the low from the October 28th located at 3,886. And we've been moving like this for over a week right now, almost 2 weeks. And it doesn't actually look that the market wants to break out of this range, neither to the upside nor to the downside. So for now, sideways trend, a little bit of the calmness on the gold market right now. Nevertheless, please remember, in the background there is still an uptrend, right? So the gold decided to make, I think it was 10% correction. Okay, yes, 11% correction, right? Fine, but then it's been moving inside of the range for last 2 weeks. So for now, no reason to think that this correction is the end of the uptrend, right? We should expect another movement to the upside, right? That the uptrend continuation, unless the low from the 3,886 is violated, is broken. If it is broken, then correction will increase and new levels will be hit, right? For now, sideways trading, calm market these days. Let's leave it like this. S&P 500 broke below the technical support at 6,765. So the next target is for the bears is located at 6,652. That's the local low from the October 22nd. Right, so the US market in form of the S&P 500 is moving down as well, right? So it's moving down. It is below, it's trending below this orange trend line. Let me just make it visible, and the outlook remains for now corrective, right? Corrective means bearish because on the S&P 500 the trend is up. Let's leave it like this. Bears are in charge of this market. Now, Bitcoin was rejected from the supply zone, as you can see, made a new low below the very important level, and almost hit the projected target at 98,106.71. The low was made at 98,963, so very, very close to the projected level, into the extremely oversold conditions. So now technically market is bouncing technically from the extremely oversold conditions. Nevertheless, it's still at the level of 38 points. So the bears are still in charge of this market. The bearish pressure is visible on this market, and we need to see and wait what the situation, how this situation will develop. If we place a trend line from the top, on the local top here, let's make it orange as usual. You can clearly see that we trade below this trend line, right? And any breakout above the trend line is needed to test the level of 108,717, and then eventually the supply zone. Otherwise, we will keep moving around this level of 101,000 or 102,000, waiting for the good opportunity to deepen our our correction to the downside. So right now, very tricky situation. It's worth to keep an eye on the Bitcoin and the rest of the cryptocurrencies, because right now this market is waiting for the trigger to either continue the correction or for the trigger to burst higher. We're waiting for that. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.